What is an angel investor? Let us start our story. Imagine a passionate entrepreneur with a business idea to manufacture highly fashionable, organic cotton t-shirts. The designs are unique, priced attractive, and the best quality cotton is used to manufacture these t-shirts. The entrepreneur is confident that the business will click and is enthusiastic about starting the business. As you'd imagine, the entrepreneur will face a typical problem: how to fund the idea. Assuming the entrepreneur has no business background, he/she will not attract any serious investors initially. Chances are, the entrepreneur will approach the family and immediate friends to pitch the idea and raise some money. Let us assume that the entrepreneur pools some of his money and convinces two good friends to invest in his business. These two friends invest in the business based on their trust in their friends. The two friends in this context are referred to as the angel investors. Please note that angel money is not a loan, but an investment in the business. So let us imagine that the promoter entrepreneur and the angels raise INR 5 crore in capital. This initial money the business gets to kickstart operations is called the seed fund. Sometimes it is also called a friend and family round. It is important to note that the seed fund will not sit in the entrepreneur's bank account, but the company's bank account. Angel funding need not always come from friends. There are professional angel investors who invest money in companies that they think are good. In return for the initial seed investment, the original three, promoter plus two angels, will be issued share certificates of the company, which entitles them to certain ownership. The only asset that the company has at this stage is cash. Hence, the value of the company is only to the extent of the cash they own. In this case, the valuation is 5 crores. Of course, one can argue that the company's value is cash plus the company's unique business idea, and therefore the valuation is beyond 5 crores, but we will not get into that. Issuing shares is quite simple. The company assumes that each share is worth Rs 10, and because there is Rs 5 crore as share capital, there have to be 50 lakh shares, with each share worth Rs 10. In this context, Rs 10 is called the face value of the share. The face value could be any number between Rs 1 to sometimes even above Rs 10 per share, as restricted by SEBI DB guidelines to protect investors. If the FV is Rs 5, the number of shares would be 1 crore, and so on. Backed by the seed fund, the promoter kickstarts business operations. The entrepreneur moves cautiously, hires the right people, establishes the right process, and starts manufacturing high-quality t-shirts. At this stage, the entrepreneur has one small manufacturing unit and one store to retail the product. Thanks for watching. In next videos, we will discuss about venture capitalist and equity and IPO.